Imagine you're in Rome in 455 AD. The Vandals sack the city for 2 straight weeks. The senators who make it out alive are not running with bags of coins. They are fleeing with gold, land titles, and portable valuables, because they understood something most people forget. Any currency can die. Any empire can collapse. But certain assets survive the centuries. We call them safe havens. And for 5,000 years, the greatest empire builders in history have always converged on the same answers. Here is the ranking of the 5 most powerful safe haven assets ever created, from least to most durable. Number 5. Art and prestige objects, the oldest safe haven in existence and the most fragile. In Sumer, around 3000 BC, merchants from the city of Ur were converting their wealth into lapis lazuli jewelry and engraved stone seals. Portable, universally recognized by the elite, tradable without currency. In 15th century Florence, the Medici family was not collecting art purely out of aesthetic taste. They were building assets. A Botticelli painting could be pledged as collateral to a banker, offered to a political ally, or liquidated in an emergency. The economic model is straightforward. A rare object recognized as precious by an elite is worth infinitely more than the sum of its materials. But the flaw is just as clear. That value rests on a consensus, and consensus can collapse. In 1917, the Bolsheviks confiscate the Russian aristocracy's collections. Part of it gets sold off cheaply in the West. In 1938, Jewish families across Europe watched their collections seized. Most never recovered. Art holds up against inflation. It does not hold up against confiscation. Number 4. Land and real estate, the most fundamental asset in all of economic history. You cannot create it. You can conquer it, farm it, build on it, but you cannot manufacture it. In ancient Rome, wealth was measured in jugera, the Roman unit of land area. Cato the Elder wrote entire treatises on managing land as a vehicle for lasting wealth. The most powerful senators were first and foremost landowners. A more recent example, John D. Rockefeller. Starting in the 1890s, he systematically converted a portion of his oil profits into land and real estate. His family still owns tens of thousands of acres across the United States today, as well as stakes in some of the most iconic buildings in New York. The oil fortune could have disappeared. The land and the buildings are still there. The logic is airtight. Land generates income through rents, harvests, and natural resources while holding its base value. It is both a productive asset and a safe haven simultaneously. Real estate adds another layer. In a growing city, a well-located building appreciates mechanically as urban density increases. That is why families like the Grosvenors in London have remained among the wealthiest in Europe across centuries of wars and crises. They simply owned the land the cities grew around. The flaw: total illiquidity in a crisis. You cannot sell a building in 30 seconds, and deep vulnerability to political upheaval. The land reforms of the 20th century in Russia, China, and Mexico redistributed millions of hectares overnight without compensation. Land survives time. It does not always survive political power. Number 3. Silver, the most underrated safe haven in history. For 3,000 years, silver was actually used more than gold as an everyday store of value, because it is more abundant, more divisible, and accessible to the middle class. Gold is the reserve of kings. Silver is the reserve of merchants. The most spectacular example: the Spanish Empire in the 16th century. The Potosi mines in present-day Bolivia began producing silver in 1545 in such massive quantities that they simultaneously fueled European trade, the Spanish King's Wars, and the Chinese economy, which had made silver its primary monetary standard. A metal extracted in the Andes that regulated prices in Seville, Amsterdam, and Beijing at the same time. But in 1873, everything changed. The United States and Germany abandoned the bimetallic standard in favor of gold alone. Silver was demonetized. Its value dropped by more than half in just a few years. American farmers who had saved in silver were wiped out. And today, silver remains a safe haven, but of a particular kind. It is far more volatile than gold. It can gain 50% in a few months and lose just as much. It appeals mainly to investors who want exposure to precious metals at a lower entry price. 1 ounce of silver today costs roughly 80 times less than 1 ounce of gold. But silver also has an industrial dimension that gold does not. solar panels, electronics, medical devices. That means its demand is partly tied to global economic growth, which is both its strength and its limitation as a pure safe haven. Number 2, government bonds. And this is where the ranking gets surprising. Government bonds as a safe haven. A government bond is simply a loan you make to a state. The government borrows your money, promises to repay you on a set date, and pays you interest in the meantime. The British consols, created in 1751, are the most famous example. Perpetual bonds, meaning bonds with no repayment date, issued by the British government to finance its wars. The investor collected interest indefinitely, as long as the crown remained solvent. Some of those consols were only finally repaid in 2015. That is 260 years of continuous interest payments. The Rothschilds built part of their empire on this principle. In 1815, Nathan Rothschild learned of Napoleon's defeat at Waterloo before anyone else and bought British government bonds aggressively. Their value exploded the moment the official announcement came. That is not speculation. That is mastering the timing on the best safe haven asset of his era. The flaw: bonds are only a safe haven for governments that actually honor their debts, and some governments do not. Default means a government announces it cannot or will not repay what it owes. Argentina is the most striking example. It has defaulted 9 times since gaining independence in 1816. 9 times when investors who had lent money to the Argentine state lost everything, or close to it. Russia in 1998, Greece in 2012. Same story. Sovereign debt is a conditional safe haven. It requires choosing the right government. Number 1. Gold. First place. No contest for 5,000 years. Gold. Let us ask the question that seems absurd but is not. Why gold? This metal cannot be eaten. It builds nothing. It is too soft to make tools. And yet civilizations that never made contact with each other, Egyptians, Aztecs, Romans, Chinese, Islamic empires, all converged on the same conclusion. Gold is precious. The answer is both chemical and psychological. Chemically, gold does not rust, does not oxidize, does not degrade. A bar buried 3,000 years ago is identical to one cast today, and all of humanity combined has only extracted roughly 200,000 tons since the beginning of recorded history. A cube 22 meters on each side, that is it. Scarcity is structural. Psychologically, it is the only asset that every major civilization recognized simultaneously as a store of value, without any contractual agreement, without any political decision. A spontaneous consensus that emerged independently on every continent. Why does gold take first place? It is the only asset that satisfies every criterion across 5,000 years. Scarcity, durability, universality, political independence. It cannot be devalued by decree. It cannot be created out of thin air. And its legitimacy depends on no contract, no state, no elite, the absolute safe haven. This ranking spans 5,000 years of economic history. And the first thing that stands out is the continuity. Art still circulates today through auction houses like Christie's and Sotheby's, just as it circulated among Sumerian merchants. Land and real estate remain the foundation of the greatest family fortunes in the world. Silver is still traded on global markets every day. Government bonds still finance every state on the planet. And gold is hitting all-time highs right now. These 5 assets have survived empires, revolutions, 2 world wars, financial crashes, the invention of the internet, and Nixon's decision to decouple the dollar from gold in 1971. None of them disappeared. Why? Because they answer a fear that has never changed. The fear of watching the product of your work vanish overnight. Currencies rise and fall, states collapse, technologies upend everything. But scarcity, durability, and independence from any third party. Those 3 qualities remain the ultimate criteria for lasting wealth, yesterday and today. 5,000 years of economic history. 5 assets: art, land and real estate, silver, government bonds, and gold, at the top since ancient Egypt through to the central banks of the 21st century. The lesson running through this entire ranking is not financial. It is human. Since the dawn of civilization, people have tried to protect the fruit of their work against uncertainty. And the assets that survived are the ones that demand the least trust delegated to someone else. One question for you in the comments. Does Bitcoin deserve a spot in this ranking, or is it still too young to claim the title of true safe haven? Tell me what you think.